This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And if we look at the results today, we can see that this is the fourth consecutive day where I have literally come to the market and done nothing. Now today I read the move, I had my sell limit order out in the marketplace, it just did not get me filled twice. And it was extremely frustrating, which drove me to an emotional state of mind where I knew that if I stuck around, there was nothing good that would have came from that. I probably would have hurt myself, probably would have burned the account. So I knew once the market did what I was looking for to just walk away, which is literally what I did yesterday. The 18th was just nothing at all, and I think I did the same thing on Thursday. So although I'm missing these moves and it's becoming very frustrating, I'm doing something that I've never been able to do before where I can just show up to the market, know exactly what I'm looking for, exactly how I want it to play out. And if it does that, but I'm not able to be a part of it, I just walk away. I haven't been able to do that ever in the past, and that's what led to my own self-destruction in the past. So I keep missing these moves, and it's very frustrating, but at the same time, I know that there's a lot of growth and a lot of maturity that's still going on behind the scenes that I have to realize and appreciate. But still, not doing anything and having the market give you exactly what you're looking for, it sucks. So let's get into it. So, how did I go wrong today? Well, first of all, I thought today was more of a challenging bias because the market opened up as an inside day again, and there was smooth buy side above the marketplace and smooth sell side below the marketplace. So it was literally the same thing that happened yesterday, where my trade model it just aims for smooth levels in price, either above or below. If there's smooth highs, I'm probably going to aim for that. If there's smooth lows, I'm probably going to aim for that. Today and yesterday, the market opened in the middle of the previous day's range, so it looked like an inside day, and it was smooth above and below, so it's kind of difficult for me to determine what it wants to draw for. So right away, I'm saying another challenging read setting up the exact same way as yesterday in the middle of the previous day range with smooth liquidity above and below, so which one does it want to draw for? And then here I'm just laying out my thought process and just seeing why should it go higher, why should I go lower, which buy should I go with? So a reason for it to go higher, it rebalanced Monday's range at the pre-market session, moved away from a deep discount. I also like how yesterday's highs are left very smooth. It's a reason to go back there. It seems to be setting up a discount gap opening setup. The issue is there's nothing solid for price to grab onto in the impulse swinging higher pre-market. It looks like low resistance and could get cleaned out in one move, but there is a large gap left open on the 1 hour. So this was key right here. How the market was setting up at the pre-market session told me that I should be bearish. And so then I asked myself, what are the reasons for it to go lower? Was the market structure shift on the 1 hour from the overnight and weakness and the large gap filling on the 4 hour and the 1 hour? So there's confluence from both of those higher time frames, the 4 hour and the 1 hour, that gap's failing. Pair that with the low resistance liquidity setting up in the pre-market session, and that makes a bearish bias probable. So what I was looking for was my bullish discount gap opening setup, but I don't like how this is setting up at all for a buy. I don't like how it keeps trading higher and moving away from low resistance sell side. It does not look like it's setting up long. So I can already read that pre-market going into the open. I lean more interested in the sell if price continues to move away from low resistance sell side and fails on a break above London or Asia highs. So I'm coming to the market with, if the market does this, then I'm probably going to buy it. But if it does this, then I'm probably going to sell it. And it ended up going this way today. So I tried to sell it. It just left. So I didn't really do anything wrong. Sometimes I just get too harsh on myself and feel like I did something entirely wrong, but I really didn't. I put my sell limit order out there, it just didn't get filled twice. I could have marketed it in, but I didn't. And it is what it is. This is still my trade model. It'll still set up again, and it's going to be there again. And hopefully next time I can capitalize on that. So let me explain what I was looking for in my bias and why. So starting from the daily, let's go here to remove all this real quick. Don't need that on the daily. Okay. So mistake number 1. I did not annotate these daily PD arrays. So my pre-market bias, one of the things that kind of stood out to me was the premium wick, right? And I say my only concern is the premium wick, which could reject price depending on how the market delivers post 9:30. So I was framing that as a reason why my bullish bias could be incorrect and why I could look for the sell. And what do you know? It did that, right? Traded right up to the lower quadrant, rejected that, and it rejected the low of that wick right at 9:30. Now, a strong reason for the market to want to go lower today was the big obvious gap that it left between the separation of this candle's high and this candle's low. So that was a draw on liquidity on the daily time frame that I was not aware of simply because I didn't annotate this level pre-market. If we go back to my pre-market approach, you can see that I just didn't have any annotations at all, right? So I've kind of been growing into a way where I'm kind of using 4-hour and down PD arrays, kind of not putting anything on there from the daily chart. That's just kind of how I've adopted my trade style to be. It's not necessarily that I have anything against them, but I like the accuracy and the precision of the more lower time frame, but still higher time frame PD arrays like 4-hour, 1-hour, 15. So I mainly just use those. Now here, having the daily PD arrays annotated would have clearly allowed me to read this move and see it. So mistake number one right there, right? On the 4-hour, here's Monday daily low. I also found it interesting how I was noting this was very smooth, right? Left from Friday. I'm targeting smooth levels in price. That's where the liquidity is going to be. On Monday, we had smooth levels above and below. We opened in the middle of Friday's range, which is this high to this low. So I'm thinking, which one's it going to reach for? Could have gone either way, but it went for the buy side first and it left all this behind. Kind of interesting how the market comes back to that in the following session, right? So going back up to the 4-hour, I was noticing how this gap did not support the market. So this gap is failing. You can see that it was treated as inversion fair value gap. This treated as bearish order block. Market taps that, rejects it. Rejects that daily wick too. So I'm seeing the failure of this gap, and if we go on to the hourly, you can see the same thing, but the market has traded down and closed over this gap on the hourly too. So now we have a gap failing on the 4-hour and the 1-hour. Both time frames telling me to be bearish. We had the smooth lows that the market went away from yesterday. Now it's kind of drawing back towards them. And I saw this gap on the hourly. And my only concern was that on the 15-minute time frame, there's no confluence with the 15-minute time frame. If you look at the 15-minute, everything in here is extremely smooth. And there's no solid discount array that shows some confluence with the hourly gap that the market should drop into, find support in, and then trade higher. So when the first thing that the market does at 9:30 is trades up and takes buy side first, then I'm looking for the market to make a run against the low resistance sell side below, take out pre-market low. And it does that. So my bias was kind of lenient. Kind of, if the market does this, then I want to sell it. If the market does this, then I want to buy it. But I leaned more bullish going into the open. Now I know why this gap did not work out. In hindsight, come back and study to find out that the reason that this did not work out was because all the low resistance liquidity that it left. So it did not make sense for the market to find support there. There was no confluence on the 15-minute time frame. So how the market opened today, it's still in the middle of Monday's range. Monday's low, Monday's high, right? Opened kind of in the middle. Now how this set up, I knew was not ideal for a long. It didn't really make sense. I don't like how this is setting up at all for a buy. Because we're opening so high on the day, we're opening near the London buy side, and all this below is smooth. If we drop down to the 1 minute, smooth, smooth, smooth. All these, I'm noticing how the market just keeps driving above, especially pre-market, how we got in this tighter and tighter range, and the market keeps driving above previous highs and failing, but it does not take out sell side. We have a minor run on sell side right here, but it's just a shallow run. All this in here is left smooth. Make another run on the high, start to fail, start to drop lower, then finally one more drive. So we had 1, 2, 3 drives above a previous high that failed. Finally on the third time, the market delivers the London session high, then breaks lower. And I find it very interesting how the market does not deliver the London session buy side liquidity pool until it's the right time. Once it's the right time, 9:30, then the market delivers that and then it breaks lower. And this was an obvious level that I had in mind. Let me see if I mentioned it in my plan. So if price presents a sell setup, this is the level I'm interested in targeting. So I was already looking for it. I already had it on the back of my mind. What I don't like is the setup of low resistance sell side in the pre-market impulse swing. This tells me there's potential for market to break lower. I also don't like how it's opening high on the day. If this were setting up a quality buy, it opened low on the day, which is why I would not rule out the idea of bearish premium gap opening setup if the market just continues to rip. Shows me willingness to reverse at Asian buy side. So here I'm saying Asia. In my pre-market approach, I'm saying London or Asia. here, it was boom, immediately at the open, right on London. So if we go to the recording from today's session, so I can see that the market was obviously breaking lower. I'm zooming out, I'm looking at these lows, I'm thinking, yep, this is looking good for a sell. I just need this to close as a large down close candle, confirm that reversal, and then I'm gonna sell these order blocks, stop loss above the mean threshold of that. Good risk to reward ratio, just targeting those lows that I was looking for. That's it. Low threshold, low hanging fruit objective. I'm placing on my sell limit order, and then trading view, paper trading started glitching and lagging out. I don't even know what was going on. Eventually I have 4 different orders on because I spammed the button, but the market never came back up there. And then boom, the next candle is also another large down close candle, delivered that pre-market low. Fast forward. Eventually the market is rebalancing first presentation. I framed the kneeling range. Let's see if I frame it right here. There we go. So frame the dealing range. Let me find it. From that high to that low, I'm looking at the midpoint. I'm looking at the market traded up just above the midpoint of that range. It barely tapped the premium, and then boom, just like that, rejects the consequent encroachment of that hourly gap. So this candle was an up close candle, but it closed lower below the midpoint of the hourly gap that I was initially looking for the market to find support in. That tells me it's not using that as support, it's using that as resistance, closed below the midpoint of that, and the following candle opens and immediately starts dropping lower. Now I'm looking at this up close candle as a potential order block sell, seeing how fast the market rejected the middle of that range. It barely tapped the premium, and then boom, went right on the following candle and closed below the midpoint of that. Everything is pointing to lower prices, and I know that the market's going to deliver pre-market low with confidence, so I'm framing the risk on that trade. And here's mistake number 2. Now, the reason I was kind of scared to get on side with this move was because I wasn't aware of the higher time frame dealing range, or the implied dealing range, or where I think the market can draw to. Because once again, this is a common mistake that I make, which leads me to miss a lot of moves, is my focus is only on the pre-market low. But what can it reach for beyond that? We have Monday daily low that it could obviously reach for next, and below Monday daily low, all this is smooth. So if it drops down and takes this low, what's going to stop it from reaching this low? And if it drops down and takes this low, nothing's going to stop it from reaching this low. Everything in here is way too smooth. There's nothing in there for the market to grab onto. And we have that gap on the daily chart. So I'm unaware of all this information, and look how much of the range that I was just simply not aware of, because I wasn't aware of the higher time frame implied dealing range. This is another mistake that I continuously repeat that does not allow me to get on side with moves, and that happened today. See how in this setup, I'm only framing my risk for the pre-market low. But if I'm aware of the implied dealing range, frame the risk on this setup, although it never even came back, it's supposed to stop loss at the midpoint. Target Monday daily low, that's a 9R, right? Target the daily gap, that's a 12R. And even then, this brings me to my next mistake. So putting my sell limit order there, don't get filled. This candle drops below that candle's low, closed back above it. Now usually that's what I want to see for a reversal, right? But we're not bullish. The market's not going higher. At this point in time with a large down close candle on the 5-minute time frame, I should know with confidence this thing is not going higher. This shit's going lower. So that kind of scares me out of the idea. I take that trade off, and at this point, I'm kind of just sitting on hands, thinking like, what's next? This gap could have been taken on as a sell because it's low resistance delivery. Low resistance delivery, I learned today, is not going to use the order block. It's going to stay heavy. It's going to use new gaps that it formed. When the market is clearly delivering in a low resistance fashion, you got to use low PD arrays if it's bearish, because it's going to reject those like this and just keep running. Now, if the market's high resistance, that's when I want to use order blocks because they're higher up in the PD array matrix. Like for example, in this little range right here, the gaps are much, much lower than the order block. Because this is low resistance, I have to use the PD array that is lower down in the range, because the market's likely to trade right up into that, reject that, and keep going lower because it's low resistance. If the market was high resistance, a lot of back and forth, a lot of deep retracements before it delivers what I know it can reach for, Then I want to use the order block because it's higher up in the range, and I would not use this because the deep retracement would be likely to stop me out. But here, it's low resistance. We're not seeing any deep retracements. It's just going like that. Boom. So in this case, I want to use PD arrays that are lower down in the range. I want to use gaps. I don't want to use order blocks. So that was a big lesson from today on how to get on side and low resistance moves. And it just went. And it just went. So same thing here. I'm looking at this up close candle. Now I'm thinking, okay, Monday daily low for sure, right? And it just went. And it just went. And it just went. And I'm like, oh, okay, wow. It really went. So if we look at the live trading check-ins, we can see that at 9:35, I know there's no reason for price to keep trading higher. At 9:40, I wanted to get on that sell, but how it dove for the sell side first, closed back inside the range, kind of tripped me out of that, right? I feel regret for not marketing it at the open, and as that large down candle was painting. So 2 scenarios where I was like, maybe I should mark it in, didn't do it, and it just kept moving. So I'm noting that this move is difficult to be a part of, and I'm starting to feel it. 2 back-to-back missed entries is frustrating. This is just left without me. And then 9:45, how I consistently miss these moves is really starting to get to me. This is what I was talking about in the beginning of the video. At this point, it's really starting to bother me. It's really starting to affect my emotional state of mind. And I know that that's going to affect the decisions that I make. So I really need to get out of there. At 9:50, now I feel like anything I do down here would not be a good trade because the market has gone so far without me. But I know what the market is drawing for, and I know this is a low resistance liquidity run. Really tired of having the market deliver what I'm looking for, but I'm still sitting sideline. At 9:55, I know how I feel. I know what I was looking for delivered. I know it wouldn't make any sense to sit here and try to fade it late into the AM session. With the mental state I'm in right now, continuing to sit here would be a recipe to disaster. I'm not going to do it to myself. I have to walk like a professional. So that's what I did. Now this right here, this is the highlight of my day because this is something that I would never, ever, ever been able to do in the past. But I did it here. Here I am. I know exactly how I feel. I know exactly what situation price is putting me in. I know I missed the move. I know I planned for it. I know I'm extremely frustrated. I know that if I stick around, all I'm going to do is try to fade it. Probably take some low probability trade that's not even my model, not even my setup. But the biggest part that's allowing me to be selective and just walk away is because I have like one setup that I'm looking for and it delivers in the opening range. And once the market does that, I know that if I stick around and try to do anything else, well, that's not me sticking to my model and that's not me following my model. So that's not something that I can consistently repeat and be proud of and think, yep, that was a good trade. That was my model. That's what I was trying to do when I came to the market today. So I can't do it. So I just walk away. So the best thing that I could have ever done to myself or done for myself in my trading journey so far, to date, was just finding that one model and just really dialing in on that. And that's it. So that's going to be it for this one. Till tomorrow with another trading recap.